The US dollar perked up over the weekend in light of upbeat macroeconomic data. The US currency is likely to trade with the same dynamic for a while. Moreover, it's expected to extend its advance later today following a manufacturing PMI for April from the Institute for Supply Management. A batch of good news from the US certainly influenced all dollar-related currency pairs. Traders were responding to such news during the Asian session. Now let's figure out what has happened over the weekend and what traders can expect in the coming days. The US dollar regained footing over the weekend. Its index climbed from 90.50 to 91.40 in just 2 days. This comes as no surprise. Investors' trading decisions and market moves on Forex, which are customary for the end of a month, encouraged the US dollar to assert strength across the board. April was a complicated month for the US currency. The reason is the Fed's intention to stick up ultra-accommodative monetary policy that subdues the dollar's strength. However, in late April, the US dollar again won favor with investors as they could not neglect positive macroeconomic data. Economists project that both the manufacturing and services sectors gained momentum in the United States. This is welcome news ahead of the publication of the crucial non-farm payrolls, which in turn could lock more than 500,000 new jobs in April. The US dollar index is expected to continue a winning streak in the nearest days because traders are anticipating strong macroeconomic data from the United States. The index is likely to trade in the corridor of 91.20 to 91.50 today. The US dollar's advance against its major peers certainly changed a trend of the dollar-yen pair, which climbed 42 pips. With this move, the currency pair reversed its trend upwards. This is also confirmed by technical indicators. Now the price needs to hit the target level of 109.60 and fix above it, so the door will be open towards 110.43. All in all, the US dollar is set to tighten its grip against the Japanese yen. Today, Japan's markets are closed for the public holiday Constitution Day. Hence, no important news will be released in Japan until Wednesday or Thursday. So, the yen lacks market catalysts for the most part of the week. Like the Japanese yen, the Australian dollar also gave in to the American counterpart. The Aussie lost over 50 pips this weekend versus the greenback. At the moment, the currency pair is heading towards the nearest target of 0.7641 and later towards 0.7565, the lowest level of February. Technical indicators are also pointing downwards, notably the AUD-USD pair opened this week with a gap, which is another factor of a further downtrend. Tomorrow morning, market participants will get to know policy decisions of the Bank of Australia and some macroeconomic data. Will it impact on the currency pair? We will see. Don't miss our daily video news to keep close tab on market developments.